Hey everyone, welcome back to our YouTube channel. Sorry to say, but this is no ordinary video. It's Armageddon, and we need to prepare. Alright, that might have been a bit much of a stretch, but it's not Armageddon for the rest of the world, but it is for the stock market. It's going to come crashing down, and all of you budding investors need to prepare. Scared? You should be. It's a serious matter. Not life and death, but money. In today's video, we'll be covering the incoming stock market crash and more. So, gear up. The US stock market is going to crash soon. Why do we say that? Well, the US indexes have concerns suggesting the Federal Reserve is going to taper its monthly bond purchases before the end of the year. Sounds like mumbo jumbo? For those of you who don't know, the Federal Reserve is the boss bank. It's in charge of controlling the movement of cash and value in the market. You can understand why that's an important role, right? It oversees everything. So, if the Federal Reserve is reducing its bond purchases, you should definitely be on your toes. If that's not enough proof, you should know that both Dow and S&P 500 claimed to record highs earlier this month. However, neither of them managed to stake their claim. Both of these are financial service companies, in case you did not know. Dow is 2.5% below its own record, while S&P 500 sits about 2% lower than its target. If the two of the biggest names in the market are falling behind, then you know things are serious. There's another thing too. Before the COVID pandemic, the stock market was enjoying its longest bull market, from 2000 to 2020. What's a bull market, you ask? It's a market where everything is on the rise and economic conditions are favorable. However, when the pandemic hit, the world came to a stop. Markets hit new lows. Things did get better for a while, but the sunshine and rainbows never returned. The pandemic is not going away anytime soon either. We are facing the new Delta variant, and if that's not enough, we have vaccination problems. In short, you cannot expect things to improve on that front just yet. Now, how are people reacting to all this? Not well. Not well at all. A lot of people are panicking, and they're selling their stocks in a frenzy. Better to get out while you still can with whatever you can seems to be their motto. Unfortunately, that's not a good strategy at all. You are essentially cutting off your own hand by doing this. Instead of making stupid decisions in a state of anxiety, sit down, drink some water, take a breather. While you take that break to digest all of this information, why don't you utilize this time to subscribe to our channel? You don't want to miss out on valuable videos like these. So, do the smart thing and turn on the post notifications. Also, help out your other investor friends by sharing this video with them too. The more people that get their hand on sound advice, the better. Alright, back to the topic. If not panic, then what should you do? First of all, accept the volatility. Investing in stocks is all about taking risks. This is just another hiccup in the road, one that you can easily manage if you keep your head. Who knows? Maybe the volatility can turn out to be your friend. When the market goes through sharp movements, it is an excellent time to revalue your assets. You can move around things into some less risky areas. Or another thing that you can do is look for hidden investment opportunities. If you do your research right, you can find some good low-priced stocks. When the market gains back a solid standing, the stock might prove to be your hidden golden duckling, raking in money. On the other hand, selling your assets is incredibly stupid. When you let go of your assets, you are essentially out of the game. You should never totally be out. Instead, keep your feet wet and stay strong. Moreover, in these circumstances, you should switch your strategy. Instead of shooting for high risks, take steps to protect your assets. Managing risk is the most crucial part. Layla Morgillo, who manages over $200 million in assets at Madison Financial Planning Group, thinks the same. So, do the sound thing and take some time and come up with a sensible plan centering around the protection of your assets. Once you decide on what to do, you must continue to stick to that plan. Don't stray away from the plan. Never stray from the plan. Another thing you can do is keep an emergency fund. When the stock market comes crashing, you can use money from the fund to get by. This way, you'll not have to resort to selling your stocks. Usually, market crashes are followed by a big rebound. So, if you did the smart thing and kept your stock, it will definitely pay off when the rebound hits sooner or later. With that, we've reached the end of our video. It's scary to imagine a market crash, but that's just how life is, or how the economy is, in better words. Just keep a cool head and you'll be all good. We'll see you next time with another video. Until then, keep making smart decisions. Bye.